Last week, 2 initial public offerings were withdrawn, indicating a dry period for the primary market. The southern jewellery chain Joyalukkas and Fabindia, a textile and furniture company, cancelled their IPOs, citing unfavourable market conditions. This followed the cancellation of the Adani follow-on public offering, which raised 20,000 crore but chose to stop the issue in early February and return investors' money when its stock prices dropped following the release of the Hindenburg report. But these cancellations were just the tip of the iceberg. E-commerce giant Snapdeal and wearable electronics firm both also cancelled their IPO plans in January due to uncertain market conditions. And since July 2022, 33 companies considering IPOs for a total of 49,300 crore had let regulatory clearances to lapse. The calendar year 2023 has been a fairly dry period for the main market. Far worse than the previous quarter when 18 IPOs were completed successfully, although all of them were small and mid-sized firms raising relatively tiny amounts. With up to 9 issues cleared to go public before the end of the fiscal year, March might see a rise in IPO activity. The initial public offerings of Avalon Technologies, Capillary Technologies, Cogent Systems, Divgi Torque Transfer Systems, Mankind Pharma, Nexus Malls, REIT, Signature Global, TVS Supply Chain and Utkarsh Small Finance Bank are all scheduled to occur on time. But a drop in sentiment could cause some of these issues to be postponed. So what is causing the primary market to struggle to generate activity? One possible explanation is the widespread melancholy caused by the rising interest rates and chronically high inflation. The RBI has been forced to raise policy rates many times and limit liquidity in other ways, but it does not appear to have reduced inflation. High interest rates tend to make investors risk hesitant, while simultaneously giving them with other opportunities to earn returns in the form of fixed deposits, as banks and non-banking financial organizations have begun to provide higher deposit rates to tap household savings. Another possibility is a shift in investment interest. Between 2021 and 22 and early 2022-23, several tech unicorns went public on the market. They were all consumer-focused, tech-driven e-commerce bets. Since then, interest in unicorns has decreased as private spending has remained static, forcing many of them to fall short of the expected growth rates. Furthermore, the majority of the companies that have cancelled their initial public offerings since then, including both Snapdeal, Fabindia and Joyalukkas, are consumer plays and investors are scared of being burnt by high valuations again. The Securities and Exchange Board of India, SEBI, is aware of the situation and has urged merchant banks in charge of an offering to agree to hard underwriting ahead of time. In other words, in conclusion, the Indian primary market has been struggling to generate activity in recent months, with several high-profile IPO cancellations due to unfavourable market conditions. While some factors such as rising interest rates and a shift in investment interest may be contributing to this trend, the Security and Exchange Board of India, SEBI, is taking steps to address the situation, including urging merchant banks to agree to hard underwriting ahead of time. As we look ahead to the rest of the fiscal year 2022-23 and beyond, it remains to be seen how long the primary market will take to stabilize and whether we will see a return to robust IPO trends in the future.